Okay, well, we're coming down the home stretch of what has been a really, as I like to say, squirrely trading day in the ag commodities because the markets are just kind of going all over the place. It's really hard to get a good read on what they want to do. We had some overnight export sales of corn to China again, but they were not as much as what they have been over the past week. The corn initially opened higher and then it sold off, and then it was trying to regroup last time we checked. So let's take a look at our current quotes here from bar chart and see what's going on. So on the May corn up to the moment, we are now trading, a half-cent higher. That's exciting. 633.5 is our last trade. However, all the other months are lower, and you have July down 1.5 pennies. And look at December. Now it's down 2 3/4 cents at 5.57 1/4. Now on soybeans, as we get closer to the end of the day, we have May soybeans down 13 cents. 14.73 is our last trade, and that's on the low of the day. So we're taking a downward dive as we look at it. And there's another new low, 14.72.5 now, down 13.5. November new crop soybeans, yikes, right at $13 even, right on the money. It's down 9 cents. It's in danger of losing that here as we get toward the close. So keep an eye on that one. Okay, let's move over to wheat. In Chicago, wheat, May down 15 3/4 at 6.85. It's taking it on the chin. The nearby is showing the most weakness. In Kansas City, wheat, the nearby May down 10.5 at 8.19 1/4, also showing the most weakness. In Minneapolis, you have May wheat down 3.5 at 8.48. Now that one, you actually have a little more weakness if you go way out there in the deferred contracts. Cotton, you have July now up 67 points. At 78.37, one of the few bright spots in the crop markets here today. December up 67. Well, we have Ted Seifried with us, and he is with Zaner Ag Hedge, and he hails from Chicago. Ted, always good to talk with you about the markets, even when it's a tough day like this. So not necessarily the greatest close the way it appears, unless things turn around in a hurry. But what does that mean if we finish up where we are right now?
Yeah, Marley, corn's trying to hold on to a little bit of strength and trying to keep itself up here right against key resistance, which it could potentially break out of. But beans and wheat really want to play the wet blanket, right? Beans, as you pointed out, making new lows headed into the close. Wheat had kind of tried to bounce midday, but is now sinking back down towards the lows again as well. So that leaves corn on an island all by itself. And we'll see how that happens here on the close. And I do assume that corn has garnered some strength from all these export sales that we've seen, the daily flash sales that we've seen to China. But also, if you look at the Chinese market, which is really, I think, why the beans and the meal and really soybean oil are under a lot of pressure here today, Chinese markets are making new recent lows. So that really begs the question, how much longer are they going to be really active in continuing to buy U.S. products if the prices domestically, if their domestic prices continue to come down? So I don't know. There is this thing, Marlon, that we do expect corn to usually rally seasonally between now and planting. It's about a 40-day window or so. The thing about that is this a year where we should tune into normal seasonality because we are at much higher prices. A lot of times we'll be at low prices and having to try to ensure that acreage is there. At these prices, I'm not sure we have to do that. And with everybody expecting to see that seasonality, wouldn't it just be the year that we don't do that? So I don't know. I'm a little bit skeptical about where we go from here. It is nice to see the corn trying to hold on to some strength, but then you look over at beans and wheat and you say, oh boy, hopefully this reverses in the last few minutes on the close. But if not, this is kind of starting to become a little bit of an ugly day.
Is this normal to see this kind of action, though, ahead of the prospective planning report?
Well, that's another great question. I mean, that goes back to kind of the seasonality that we were just talking about, Marlon, right? I mean, a lot of times you have corn and soybeans kind of jockeying for position to try to buy those last-minute acres, or at least ensure that we're going to find weather to get those acres in. I don't know if we really need to do that this year. Prices are already pretty darn good.
Okay. Interesting. Well, thanks for explaining that, Ted. We'll come back in a moment, and we'll take a look at our livestock trade here on a Tuesday when we come back. Well, as promised, we're talking with Ted Seifried right now, and let's take a look at the live cattle market then. This is another one that turned around after the open this morning, but so far it's only on the nearby contracts. Very intriguing action here. You have the April live cattle after opening lower, now we're 40 higher, and June live cattle, that's where a lot of your action is, That's 65 cents higher at 156.17. Well, on the feeder cattle side of things, with the corn market kind of falling out of bed here today a little bit, you have the April feeders 17 lower at 194.45. But hold the phone because the deferred contracts are a little higher. Well, for example, May is up 17 cents. Then you get to lean hogs, and lean hogs lower across the board. Nearby April down 70 at 77.07. That's a lot of sevens. May lean hogs down 37 at 84.77. More sevens. All right, let's bring back Ted Seifried here and talk about this. So compared to the grains, which are seeing steep losses today, livestock trade, it's just kind of meandering around, holding its own today. Don't know for sure if that means much in the bigger scheme of life or not. What do you think?
First of all, I have no comment on hogs, right? We keep looking for hogs to try to find some footing, try to find a bit of a bottoming activity, but so far it's really hard to justify that or say that. But you got to like what you're seeing in cattle today. Big reversal off the low. The June in particular looks really very good on a chart after making a new recent low, kind of getting into some key support levels and then turning around and reversing higher. We were due for a correction in the cattle market after a long-term bull market. Cash had started to get a little bit ahead of itself. We were pricing out some of the packers' margins, but now we've kind of hit the reset button. And I think things look good to go higher once again. Domestic demand seems really good, even though there's been a lot of question marks about the economy and banking and so on and so forth. Still seems to be all right. So, I think higher feeder cattle are just kind of caught in the middle here because corn is very indecisive on what it wants to do today. And I think that's making the feeder cattle a little bit indecisive as well. But it's a nice bounce off the lows, and you got to take that for what it's worth.
Well, Ted, if you don't mind, I'll visit with you for the Rural Evening News tonight as well. We'll chat just a little bit about the markets at that time. Ted Seifried of Zaner Ag Hedge. And I will leave you with one thought before we turn it back to Suzanne. Crude oil trade. Look at what's going on in crude. With all the other volatility today, crude oil is firming up, and it's up $1.85, Suzanne.